Bitcoin has taken a massive hit lately, and I got a great strategy for you to get back in for the bounce back, nearly risk-free. Let's take a look. All right, first of all, I'm not your financial advisor, and I'm not an accountant. So this is for illustrative purposes only. This is not to be intended to be financial advice. Okay, now with that said, let's take a look at what the strategy is. First of all, IBIT, okay, it's one of the biggest, if not the biggest, Bitcoin ETFs. Has come down quite a lot, $55 recently, all the way down to this morning, touched 56 even, I think. And it hovered in this 57 area for quite a while this morning. So I'm taking a look at the options market, and I came up with this strategy, or with this idea here. Purchasing IBIT this morning at 47.07, and this is the ticket on the way it looks like, okay? Buying 2,000 shares at 47.07. And I'm going to be buying a put and selling a call, also called a collar, to offset the downside risk of holding this thing. Who knows? Maybe it goes even farther down, right? So how does that look like? I went out to 471 days, pretty long period, 1.29 years, bought the strike that's closest to the price of the underlying, sold the 55 call. So my upside potential, and I want to be clear here, my max potential is $8, okay? At 2,000 shares, at $16,000 gross. Now you could plug in 100 shares in here if you don't, if you want to put less money in, or you could put in 20,000 shares in here. Cash needed to execute this trade, with my margin, it's about 50% of what's needed. Okay, $46,000. I then had to go and borrow the remainder, which I was able to borrow at 4.7%. Now you might ask, wow, that's a great rate. Ask me in the comments how I was able to get that rate. I got a great place to guide you towards to be able to get that rate. So the total cost over the life of the borrowing period is $29.17. So that's 471 days. And the annualized cost is $22.60. Okay. My net max profit, and again, I want to reiterate max profit. So I can't make more if IBIT goes to 60. I'm capped here. I can make less. Okay, we'll talk about some of the risks. That's why I said nearly risk-free. There are some risks to be aware of. When you take into consideration the cost to do this, the strategy, you're getting about 30% return over 471 days. Okay, annualized, it's 23.14%. Pretty juicy. Okay, and your max loss, like I said, is the differential between the price that you paid and the put strike. So risking $140 to possibly make 13,000, tying up 46,000 bucks. Pretty solid strategy if you're able to follow me with this. If you can't, by the way, I'd love to hear your questions or how I'm doing this. But this is a real thing. It did happen this morning. It's changed since then. This is where some of the risks come into play, which I want to talk about. So real risk, like actual dollar risk that can be quantified, is the entry price to strike price difference. So you saw for me, it was 7 cents difference. The maybe less quantifiable is the opportunity cost. Okay, if IBIT settles less than 55 at 147 days, or for example, if it settles right at 47, then this strategy is not making, it's actually net losing. And the reason why it's net losing is I won't make any money, but I will have borrowed that money to execute. Okay, so this realistically, I would almost deem this the risk. And I could probably even add it down here. Now, again, if you're ultra bullish or even somewhat bullish on Bitcoin going back up and therefore IBIT going back up, maybe you're deeming all of these risks as totally fine. You could also not borrow. Okay, you could just not borrow, and if you don't borrow, you're still getting 13% return. Again, nearly risk-free annualized without borrowing, and therefore removing that risk. So we're just adding a little bit of leverage here, really, when we are borrowing. And as you know, with leverage, it's double-edged sword, right? The other risks to be aware of is just standard liquidity, weird things happen in the market, your own human error on executing this or exiting it, frankly, at the end. And there is, obviously, I didn't mention this one, or I didn't write this one down, but tax risk from the sense of when you're winning, which that should just be standard known when winning. That if you're going to win, you're going to pay taxes on this. But I would love to hear your thoughts on this. Seems like it's a pretty good strategy. We have bounced back since that 47. But if you take a look now, you might still be able to do it even at 49, or if we go back over to 50. All right, I look forward to your comments. Have a great day. Thanks.